Hi, do you want to take advantage of all the tax savings opportunities for real estate investors under tax reform? This is Amanda Hahn, and I'm a CPA by day and real estate investor by night, and I'm really excited to be here to share with you 8 tax tips you must know for 2019. Tax tip number 1. As real estate investors, we're generally pretty good about deducting our interest, taxes, and management fees. But many people overlook other legitimate business expenses as it relates to real estate. Some common examples might include business travel, business car usage, a home office, maybe educational books and other items that you need for your real estate business, maybe a laptop. These items add up over the years and can save you some big tax dollars, so make sure you track them throughout the year. Tax tip number 2, under tax reform, the IRS took away the ability to deduct HELOC interests on our primary homes. However, if you took out a HELOC on your primary home and you use that money for your rental properties or your fix and flip, the interest is still deductible, so make sure you're tracking that accordingly. Tax tip number 3, another pitfall from tax reform was the IRS started to put limitations on the deductibility of certain property taxes and mortgage interest for our primary home. Keep in mind though that these limitations do not apply to investment real estate. So your interest and taxes on your rentals or on your flips are still fully deductible for 2019. Tax tip number 4, one of the great things about tax reform was that it brought us the 100% bonus depreciation deduction. This means that if you're buying assets for your real estate, such as furniture, equipment, a laundry machine, maybe a laptop, these may all be eligible for a 100% immediate write-off rather than having to depreciate them over multiple years. Also, this is available on new as well as used assets, and you can use it with or without a legal entity. Tax tip number 5, for wholesalers, flippers, syndicators, real estate brokers, and real estate agents, you may now be eligible for a great tax break under Section 199A of the IRS code. What this means is that the first 20% of taxable income might be completely tax-free. So if you made $100 of taxable income, $20 of that you might not have to pay taxes on, and you may only pay taxes on the remaining 80. Key element here is you may be able to use it with or without a legal entity. Tax tip number 6, what about landlords and those of us who invest in short-term rental properties? Do those qualify for the 20% tax break? Well, the answer is it depends. If you meet some of the safe harbor rules that the IRS released, then landlords may also get a 20% tax break on rental income as well. Tax tip number 7, are you looking to sell highly appreciated real estate but don't want to pay capital gains tax? Or maybe you just want to sell appreciated stock to move that money over to real estate. There was a great tax benefit that came out with tax reform called the Opportunity Zone Fund. What this does is it allows you to reinvest your capital gains money into Opportunity Zone funds to then be able to defer the capital gains tax. In addition, if you hold that property for 10 years or more, you may also get 100% tax-free appreciation on the post-acquisition asset as well. So really great benefit. Tax tip number 8, before the end of the year, make sure you talk with your tax advisor to find out if there are ways for you to pay towards your own retirement rather than paying the IRS. This year, it's possible to defer up to $56,000 of income into a retirement account to defer the tax. Furthermore, once the money is in the retirement account, you can potentially put that towards real estate investments by using a self-directed account. So definitely talk to your advisor about that. And that is it for our 8 tax tips for 2019. Remember, it's not just about how much money you make, it's about how much of it you actually get to keep. More saved tax dollars means more money for you to invest and grow your real estate. We've written a couple blogs with additional information about some of the strategies that we discussed in the video, so check those out using the links below. Thank you for joining us and happy investing.